In this episode, we're talking how your credit score is affected by real estate investing. And if you have bad credit, how to raise your credit. Stay tuned. All right, guys, welcome to Investing with the Baldo Vinos. I'm Josh.
I'm Hannah.
And this is our journey in real estate investing. If you're new to this channel, consider subscribing. We follow along our journey in real estate and trying to get way too many doors.
Not enough doors, actually.
Not enough doors.
Yeah.
Okay. Babe, what was your relationship with credit before you met me?
Before I married up. Yeah, no, I had no history with credit. I just like to rack up my debt. And I was told very early on to get a lot of credit card debt and then only pay the minimum balance each month. And that's how you build good credit.
Yeah, so she was only making minimum payments and opening a lot of different credit cards. And then we eventually had a sit down conversation and I broke down how interest works. And then we quickly did everything as possible to wipe out as much of her credit debt as possible. And now we only have we do have a car loan and we have one student loan left.
My student loan. Sorry.
Yeah. Now I'm paying for all her college partying. Yeah. Not the education.
No.
It's actually the rounds.
I rarely paid for education with my financial aid. It was all alcohol. Don't judge me. I'm different now.
Well, now that she's in her, I won't go there. Okay. So yes, we had a sit down conversation. We combined our finances. That was the process in itself. That's another episode maybe. Okay, let's go back. Okay. So credit history. I was lucky that my dad taught me early on to always pay off my credit cards. And so I would treat it like a debit card. I would charge it, get points, and then pay it off every single month. And so I had good credit and she had not so good credit. For those who have bad credit, one thing, if you're looking at buying an investment property, is to then partner with someone who has better credit and maybe they can take on the loan. So if you can't qualify for a loan yet, find someone who has better credit and then they can bring the loan. You can bring it down however you want to mix and match that. There is a way that you can do it with bad credit. And then, of course, also start working on your credit. Let me just show you now what your current credit score is.
Yes, that he helped raise. I literally had nothing to do with it.
This is my credit score. I have 780 and 792.
What's it out of?
It's at 850.
I'm asking for the common people, guys. I'm just what I'm here for.
And then this is yours now.
Which one's me? That's mine?
Yes, you have 804 for
Mine's
one.
better than yours.
And that's your second. That's Equifax credit score.
What's that? Is that a different score?
Yeah, so you have 804 and 816. It's the average. There's actually three different credit. There's just different credit bureaus. They all kind of report and have their own little algorithm that shows you how good of a borrower you are. And so it's the average of three different credit bureaus. Credit Karma is a free service that uses two of them. There's a third one, and they all kind of vary. Take the average. Well, yes, and she has better credit than me. But also because I'm taking the brunt of all of the loans right now. Actually, now that I'm thinking about this, since you changed jobs and I'm staying solid for a while, you should probably start taking on some of the loans while you have a W-2. This could, okay, plot twist. This can now change our strategy for another video. Okay, so how can you get good credit? First off, anything over 700 is pretty good. Anything over 740 is considered excellent. And the bank doesn't care if you have over 740 at that point. The interest rate for you for being 816 versus someone having 740 will be exactly the same.
Oh, pro tip.
Yeah, not a financial advisor. Check with your loan officer, but
yeah. How about for everything in this video stated, check with your loan officer, CPA, all that stuff. How about that?
Yes. So there are a couple things that do impact your credit score. There's payment history, your credit card use, any derogatory marks. So if you have late payments, how old of a credit line you have. So if you've opened up a JCPenney's credit card in college.
JCPenney. Oh yeah.
No.
Not JCPenney's. I had like American Eagle, New York and Company.
So as long as you don't hold a balance and as long as there's no annual fee to hold that credit card, you should, again, talk to a financial advisor about this. But if you keep that credit line open, that increases how long your credit age is and shows how credit worthy you are. As long as you're making sure that you're keeping all your payments current, you're not missing any payments. Even if you have a credit card open from the past and you forget some type of balance that's on there, that will affect your credit score negatively. Also, how many accounts. And the last thing is how many inquiries do you have? This is where this is at my credit score now.
I was thinking about all the credit cards I used to have. Sorry, I wasn't listening. There's a long list.
So real quick, how this affects our buying. So one, my credit score is lower because we have now bought in 3 properties in the last 4 months and are in the middle of refinancing. And I'm the only one that's applying on the loan. So only my credit gets pulled. Did you know that?
Yeah. But then I was thinking, you said we should start putting more loans under my thing, but I have my student loan. So didn't you say something about a debt to income thing?
Yes, good. But I also, so now we're getting a little more complicated, but I co-signed when we refinanced your student loans. So your student loans also reflect on mine. And we'll probably wait until your job picks up and you get a little more income before we start putting properties under your name. Okay. But yes, she brought up something that was good. The debt to income ratio, or DTI. Debt to income ratio is important because essentially, if you buy a house, you have more debt. If you have a credit card, you have debt. If you finance a mattress on a credit card,
it wasn't me. It was me.
You have more debt. And so the more debt you have relative to your income, then your debt to income ratio gets affected in that sense. And so your goal is to maintain a manageable amount. Some lenders won't lend or won't give you a mortgage if your debt to income exceeds more than between like 35 and 40-ish%. Again, check with your lender, but what their ratio is. But you want to always manage that. Now you're like, oh, wait, Josh, what happens if I have lots of mortgages?
What happens if I have a lot of mortgages?
Okay, so if you have a lot of mortgages, right? Say we have 3 properties now, and you would think that all of that affects your debt to income ratio.
Yeah, I would assume that.
Great question.
Tell me more. Tell me more.
Okay, so here's how this works. So say, for example, one of our first houses, the Miller house, we have roughly about $600 in mortgage payments. So that's $600 a month going towards our debt, right? But the rent is $1,300. Well, it's my excited voice.
I know your voice went really high.
Can you get your phone?
Okay.
I need to calculate this. Okay. So the rent is $1,300 a month, and then we are paying $600 a month. So there's a gap, there's a profit there, right? And let's do the math right here. The math. What is that? So 600 divided by 1,300. Oh, actually, I don't want that. The bank will take 75% of the rent amount. That's 0.75. Whoopsies. 1,300 times 0.75. Okay. Which is
$975.
Okay. So they consider our income off of this property to be $975. Now, if we owe $600 a month, we have a $375 profit, according to the bank, on that property, which means this property doesn't negatively impact our DTI. It actually
helps.
It does.
Whoa, I'm learning so much on your channel, babe.
That's why she's already subscribed. If you're not subscribed already, you gotta subscribe. Yes. So actually, the more properties you have, the better you increase your debt to income ratio, because the more income you have now, have given yourself a raise, and the bank sees that you've given yourself a raise, and now you can buy more properties.
Question.
Yes.
But when we saw that my credit was better than your credit, and it's because you stated the loans are under your name.
Yes.
Like, if it helps, then what's up with that?
Yeah, well, it's because I'm still also currently having more inquiries. So I have right now 6 hard inquiries in Credit Karma. So then those will ding your credit a little bit, probably drop, I don't know, between 5 and 15 points, just depending on wherever you stand in your credit life. Because now I have 6 different hard inquiries in the last couple of months that take almost a year to come off your credit. I have those, and I'm going to still have some more because we're still going to refi out and things like that. But she has 0 inquiries.
So is that something for people to be aware of?
Yes, I think yes, to be aware of it. But if you have, again, like I said earlier, if you have a 740 credit score, you're seen exactly as someone who has an 816 credit score. So the point of credit is to use credit. You can have great credit, but if you never, ever, ever take a loan application out, you're just wasting yourself as a good borrower. And as long as you have a financial plan in place on how you can pay off that debt and how you can service it and how you have contingencies in place, then yes, use your credit, leverage the bank so that you don't have to bring all the money all the time, but because you've shown good financial discipline, you're responsible and people will want to do business with you like banks. That's about it. So if you're working on, that's a wrap for quick how rental properties impact your DTI. How can you get better credit? Quick tips, go.
Pay off all your balances each month. Pay off all your balances each month. I'm like the textbook case of what not to do. What else?
You can also say you have a partner. If you have a partner, whether it be your spouse or a business partner, and you're really trusting with them, then they can add you on to a line as a authorized user on a credit card. And then now my credit history of that card then is also calculated into her credit card. So by me adding on her as an authorized user to my credit card, it automatically boosted her credit score when we were working on building her credit. But yeah, just pay your bills on time, live below your means, always pay off your credit card. And then you'll just be a perfect candidate. And it takes a little bit of discipline. It is a habitual thing. I actually pay
a little self-awareness.
I also pay off our credit cards weekly. A little overboard, definitely overboard.
He's a little extra.
But for one last geek tip, and I'll leave this at the end, the more you use your credit and the bigger your balances are that get reported, that will also negatively impact your score. So I try and mitigate that by paying off the credit cards a little more frequently. So then a smaller balance is reported every single month. Ooh. So that my credit stays higher.
I didn't know that. That's good.
A little extra.
Yeah.
And I like to see the credit card miles points go up and up and up and up and up and up.
And don't buy rounds of shots at the bar if you don't actually have money. That's my pro tip.
Yes. Just buy a bottle and bring your friends at home and
buy a bottle. And then or just drink his wine. He's got a bunch.
Whoa. Get a job in the wine industry. Just, gotta be creative on how you have fun still. But yeah, I hope you guys enjoyed it. If you have any questions, if you have any tips of credits below that I didn't cover, please leave them in the comments below. If you found this helpful, make sure to
like and subscribe and hit that notification bell so that you never miss a fit tip with Wit again.
Wow.
Don't put that part in.
Now you know another fitness channel that she watches.
What did you just ask
Okay,
me?
so just subscribe. Hope you guys found this valuable, and we'll see you guys on the next one.
Cheers. Bing.